Just stress do stream. Live stream very stressful. But it's niche, it's niche. Because nobody do it. Mic test, mic test. Hello everyone. Starting soon, okay? Just give me like 30 seconds more, 30 seconds more. Okay. Let's go. Okay. Hey, what's up, everyone? Hey, hello, everyone. Okay, we're starting. Okay, just give me like 30 seconds more. Sorry for being late for 10 minutes. Let me just do a quick mic test just to make sure it's okay. Okay, just a final mic check with kickstart. Okay, I think we are good to go. Okay, I think we're good. Hey, any point of time the stream not clear or what, let me know, okay? So, sorry for the slight delay. I hope to see everyone back, and then we will start in 30 seconds. So today same thing, okay? So each time, right, we stream for just 1 hour only. So probably in 1 hour's time we will cut. Okay, not too long, so it's not too draggy or what. So same thing, each segment, each stream always has 3 segments. First segment is the market sentiment, specific stocks we want to talk about, and then things that, especially things that affecting the market, micro or macro news. Then the second segment is the options part. Okay, I have updates for you on my options position. So I want to share with you all the live trade that I have made just yesterday, the position I have built, and some of my thought processes behind certain put options like Nvidia. Lastly is a chit chat session. So the last part of the stream is always a 5-10 minutes casual chit chat session. Not too serious, but just some topics that we want to talk about. Okay. Hey, hi Yaf. Nice to see you. Hey, hello Yaf. Good to see you again. Biren Run. Hey, hello. Good to see you again. Thanks for dropping by. So if you're here in the previous stream, feel free to drop by, say hello or hi. Be it you are from Instagram, TikTok, I know you all watch some of my shorts from there. Yeah, just feel free to drop by, say hello. Even from YouTube itself, all the shorts video you all watch. And then just feel free to say hi and ask any questions, and I will try my best to answer. I always try my best to reply all comments, okay? But if I miss it, just repeat it so I can make sure I address and attend to it. Okay, hey, evening you, long time no see. Good to see you again, you. Good evening. Okay, so past few days we were talking about Microsoft, and then the options component were mainly covered call. So today we will build on a bit more on a covered call, some elements, and share with you my position that I've made. And today we want to talk mostly about the market sentiments, okay? Market sentiments and what I foresee likely, okay? Not say 100%, but based on my thought processes, the data I have now, information I'm looking, how I foresee market will trend probably during the mid or long term. Okay, so let's start, okay? Sorry, late for 10 minutes, cause some delay. Okay, cause just now the microphone, don't know, got some issues. Okay, let's start now. Okay, let me trade. Okay, I put my face on top here first, okay? So today I just want to share is that so recently there's been quite a bit of news like Iran war, I think recently Trump tried to had an Iranian threat, right? Then he tried to switch plane, people saying that he covert and changed to another plane when he fly here and there or out of Turkey, that kind. So you can see that there's quite a lot of actually negative news like forced labor tariff, Iran war, all these things. But markets still trend upwards. Markets still continue to go up. Means what? Nobody, or rather investors, are no longer bothered by all these headlines anymore. So you see, if you notice the past trend, right? Every time when there's a news, there will be a shock factor. Be it like COVID, tariff. Example, tariff recently, right? I mean, like 1 or 2 years ago, Every time there's a new news, okay, something new, it will be a shock factor that will cause the market to drop significantly usually. But as time passes, people start to get used to it. You realize the market no longer care about such news. So that's how market tend to evolve nowadays. So you see tariff, Iran war, all this, nobody really bother about it. Market has been trending upwards. What? SPY is what? 770, close to all-time high literally. All the tech stocks have been recovering non-stop. So you can see catalysts actually work both ways. You know? If we want to have catalysts to move downwards, right, there must be a shock factor, shock news, something like shocking to people. Same thing, when it goes upwards, right, there must be something that is shocking as well. So it will cause a huge spike, suddenly tariff war removed, suddenly Iran war stop, market will balloon. So you can see at this point of time, market already been trending upwards. Imagine what would happen if Trump suddenly said, oh, the Iran war has stopped. We have come to a peace deal. Straits of Hormuz remain open forever to everybody. Tom, Dick, Harry, ants, mosquito, fly, butterfly, dinosaur, everybody can come, including aliens. Everyone will be happy. Imagine how much the market can rally upwards. So you can see that despite all this news out there, all the things that market have been trending upwards, but just imagine suddenly there's some good news, market will rally even higher, way higher. So that's what I foresee, right? As time passes, okay, eventually, I believe, right, eventually, this tariff war eventually will probably kind of have a resolution, hopefully, and hopefully as well, the Iran war eventually have a resolution, and then market can balloon upwards. So another concept that I want to share is that my theory has always been market will always slowly trend upwards if everything else remains constant except inflation. So let's just say there's no negative news, no positive news. Life as it is. Okay, we are in a Joe Biden era, okay? Whatever, okay, life is still, everything is normal. But inflation continue to occur because, as time passes, things always slowly become more expensive. I mean, you can look at past data, past 20, 30, 40, 50 years. Even just the past 10 years ago. Even before Trump, you'll realize that market tend to keep climbing upwards. Why? Because of inflation. You see, price of goods always slowly trend upwards, be it due to money printing, people asking for higher salary, then there's a cause and effect, right? If I ask for more salary, someone must pay me, then company must earn more money to pay me. Then in order to pay me, company earn more, company need to charge customer more. Then customer must pay more. So it goes in a cycle, inflation. People will keep asking for more and more and more, and then the cost of goods, right, will just go up, keep going up, and affecting all the areas, everyone. So you can see when all these costs of goods go up, who are the ones who actually cause the price of the goods to raise? Actually, it's everybody, including the company itself. So, example, all these companies like Apple, Microsoft, the past few years, if you have observed, they have been raising prices non-stop. Even before Trump was around, let's be honest, even before Trump era, 10, 20 years ago, prices have been creeping upwards. Apple had been selling their iPhone from 800, 900, 1K, 1.5K. When Apple was selling their phones for $2,000, right, everybody was laughing at Apple. Eventually, people accepted and just buy it. So, with everything remain constant, market generally should trend upwards because of inflation. So that's my own concept and theory, or you want to say is rule. So regardless, right, end of the days, I think we are seeing it now that, despite everything, nothing new shocking, nothing big major news or whatever, it's just all the old news, market still trend upwards slowly. Why? Because of inflation. Okay, so that's my belief that long run, okay, market at least for now, okay, in the next 3 to 5 years, I believe it should at least trend sideways or at least keep moving up a little. So that's my take. So overall, my take is that global economy can continue to grow, and that likely, okay, I think SPY, right, could potentially break 800 very soon. It's already 770. I think 800, maybe even before year end, to be honest. Okay. So that's my take. I just want to share with you my overall market sentiment and what I think a few years down the road, and my thought process behind why I believe that market will likely trend upwards in a couple of years later. Oh, sorry. Drink some water. So I bought some milk tea to reward myself. Actually, it was given by a beautiful lady, so I didn't buy it. But I want to reward myself, make money from stock market, I must enjoy a bit. This milk tea not cheap, okay, quite expensive. But it tastes good. Okay, okay, next point I just want to share with you all on the stock Apple itself. Let's talk about Apple today. Okay, so the past few streams, if you have been around, I've been saying that I want to build some position in Apple. I want to buy like 20, 30 shares or even 10 shares. Okay, so I've been holding back to buy Apple even at 305. It's because Apple only recently just announced result like 2 weeks ago, right, around there. So usually when company announce result in the pre and post earnings result, right, 2 weeks, okay, 2 weeks before and 2 weeks after, usually the stock price can be quite volatile, a lot of movement up and down. Same goes for their option prices. If you notice, right, it has been about 2 weeks. Apple stock tend to stabilize a bit. You all can observe, right? Apple was like 303, 308, 310, and go back, go down, go up, go down. But recently, it has been trending about 305 plus minus that kind. So I feel it kind of stabilized from the shock after the earnings result, and there's more like something like people say like consolidation, or the profit taker has done their job, take profit and ran away. Those who buy have bought in already. So that's why now it's more like a consolidation phase. So I share with you my take is that because of weak forward guidance in the recent earnings result, I think Apple could potentially has more room to dip a bit. Not too much, but probably a bit, because Apple has already dipped quite a bit from $330 to about $300. Correct? So if Apple persists at 305 for the next few days, I will just buy it, or 10 or 20 shares about there. But if Apple tonight can dip, okay, like 303, 302, I will immediately buy. No hesitation, I buy right immediately, okay? Even when market open, I buy straight away. Market open in 10 minutes, today market open, let me see. Sometimes, because I'm in Singapore, market is open, there's a pre-market. Okay. Because sometimes we are here locally, locally here, I'm in Singapore. Sometimes, right, US, they have holidays, and then I miss out that, actually US market is closed, maybe due to independence or presidential day, that kind of stuff. So, okay, market open in 10 minutes, so later we will same thing, identify opportunities, and I'll share with you my take on the market and my next move. Yeah, so that's why my take on the Apple for buying on the purchase price wise. So if it continues hover at 305, I'll probably just take it as well. Okay, so last thing I just want to share with you why I'm still bullish on Apple despite the weaker forward guidance. Okay, I know I shared previously a bit is that they can raise prices. Okay, they have pricing power. They have no problem raising iPhone by $50, $100. People will still buy because people who buy iPhone products or Apple products are rich in the first place. They will not be deterred by just $50 or $100 increase. But second most important thing is their leadership. Okay, I always believe look at their leadership first before their business. So the good thing is Tim Cook, right, their CEO, I think stepping down soon in September, hand over to John or something. But Tim Cook remains the chairperson, something like that, okay? So he's not leaving, he's still around in Apple. So that's why I'm still very confident in the leadership. For the new CEO, we'll monitor him a bit and see how things progress. But because of Tim Cook's presence still in Apple, I'm very confident Apple will continue to do well, at least for as long as he's there. If you look at him and his management, all very solid, lots of experience from all around, and most of the time they have been in Apple for like 20, 30 years, that kind, donkey years working there. So they don't just anyhow promote people randomly or parachute random people, like I hate to say, if you're from Singapore company has a bad habit of parachuting people with no experience, like from the army or whatever, into those private company, and they run the company down. But I think Singapore have learned already, so nowadays they stop doing that, kind of reduce. They put truly talented people into those company like DBS example, you know, it's the local bank in Singapore which is doing very well. So because of this solid Apple management and leadership, I remain confident that Apple will likely able to manage this chip memory constraint issue, and likely, okay, I'm not saying for sure, but I think in 3 to 5 years time, they have a good chance of doubling up, I think. Very good chance. Okay, last thing, okay, just one last part, okay, I try to make it short now. That I really want to talk about Apple is their adaptability. Super highly adaptable. Once again, thanks to their leadership. So I give you an example. You know, recently their Siri, right? Their AI is called Siri, if I remember, was found to be very weak, very lousy, and their management own self acknowledge it. Straight away you can tell their ego not high. You know, they acknowledge Siri is not good, and they partner with Google Gemini. So you can see those leaders with big ego, you know, very proud, wouldn't want to partner with other people. They'll think that their AI is the best. I'm number one. I'm the king. I'm the emperor. I'm Michael Jackson. I'm the champion, okay? But Tim Cook, you know, their management don't think like that. You know, they know they are weak. They admit it. They adapt. Highly adaptable. So they adapt by incorporating Google Gemini into their Apple software, iOS. So because of this high adaptability, I foresee that Apple can continue to do well as well. Okay, you know, their ecosystem is very sticky. Very, very sticky. Very hard to get out of the Apple. If you have used Apple before, okay, let's be honest. Anyone who has used Apple before, you'll know that Apple always are very sticky on. Like you want to transfer file from Apple to other like Windows or Google, always a lot of issue. Okay, because you are so used to Apple iOS, all these things, it's very hard for you to change. So because of the stickiness, the ecosystem and the mode, and their ability and willingness to adapt, you know, incorporate other people tech or their other AI into their system, they will likely, you know, survive long run. Be it there's any new revolutionary technology or what, they can easily incorporate into their Apple system. Okay, like I said in my yesterday's stream, right? Companies like Apple, Microsoft, right, they have huge footprint, they have billions of users across the world. Okay, so companies which have a revolutionary product or something very significant, we want to partner with this type of company because they have huge number of users and people there, and they can easily get used to, or at least be advertised. Okay, let them see this new revolutionary product, you know, so they can monetize from there. Okay, so that's all for my take on Apple. I won't say further, okay? So that's why I remain bullish on Apple, and I think that this recent sell down, personally, not financial advice, not financial advice. Remember, I'm pigeon investment, bird. See a bird here, this one not pigeon, this one is, I think owl or eagle, okay? So don't take advice from a birdman, okay? So not financial advice. I believe Apple will continue to do well in the next few years. That's my take, okay? Okay. So let's see any comments. Any comments, any opinions, feel free to share, and then questions can ask me. Next segment, we'll move on to the options component. Evening everyone, good evening everyone, good to see you. Hope you all have been doing well. I hope you all had dinner, and then I know Tuesday, but it's okay. Weekend coming soon. Wednesday, Thursday, then Friday, Saturday, Sunday. So about 2 more days. So hang on tight for 2 more days. Then it'll be Friday, Saturday, Sunday. Then you all can have a good rest, all these things. Because I know some of you are working, and I know corporate life, working is not easy. Everyone hopes to achieve financial freedom and retire early. So I hope everyone will get that eventually. So if you're working, hang on tight. I will journey with you on this, okay? I will. Okay, any comments, feel free to let me know. If I miss out any also, please just repeat, okay? Because sometimes the comments appear here but not here, or vice versa. So I might have missed out some of your comments. Eat less food. Okay, can. Okay, I drink some butter. Okay. Wow, this chagi milk tea tastes good. Damn. Ooh. Wow, very high quality, the milk tea. Go reward yourself once in a while, okay? I'm not sure if your country has Chagi, but I think most Southeast Asia, I'm not sure, but should have this brand. Pretty solid. It's like boba tea in America. Okay. Then in this case, let's move on to the next segment, okay? Option component. Okay, so I changed screen a bit. So my face below. So my options is in the first screen. Okay, first screen on top is my options holding position. Then second is the market. So market open in about 2 more minutes. Then we see how it goes. Okay, so if you notice, if you were in my previous stream, okay, you'll notice I make some new position for Apple put. So OG, I only had 2 Apple put position. I show you. So can see or not? Wait, let me see. Wait, I see. My mouse. Okay, you see my mouse, can it? So now you can see I have 4 Apple put position in my first screen. So yesterday I only have 2 because yesterday Monday, right, after the stream, I mean during the stream I did share with you all that I will be opening new Apple put position based on the market prices. So after that, I opened 2 position. So new 2 Apple position, which is let me see 2026 December. Wow, I can't even remember which position I opened. Okay, this one, the first one. So it will expire in December this year. Okay, so the strike price is 250. Okay, Apple strike price 250, and I collected $280 premium. Okay, 280. Then the second position is 2027 December, which is like next year December, and I collected $380 premium. So 380 plus 280 is about 600 plus, okay, 660, okay, let's just put 650. So I've opened 2 new Apple put position at $650. One with strike price at 250, another strike price at 190. Okay, so I want to share with you why I make this position. So number one is I said earlier, I remain bullish on Apple. Okay, I don't mind getting assigned Apple. Imagine now Apple is at $300. My strike price is 250 and 190. Would I be unhappy if I get assigned Apple at 250 or 190? Of course not. Since I'm going to buy Apple and I get to buy at the discount from the current price, I will be happy. Okay, so that's the mentality and perspective you need to have if you are doing the option view strategy. That, you know, not just collecting premiums, which is the $650, is good. That's part of the process. But being able to buy stocks at the discount is one of the hidden element essence of the view strategy. So imagine I get to buy them at a discount and with bigger margin of safety. No long run, who knows, it rises. I can even earn from the capital appreciation. So that's why setting the correct put prices, setting the correct strike prices for your cash cover put is also equally important. Okay, so that's one of the reasons why I put at this, I opened 2 new Apple put position. Okay, so another reason is because why I set a further strike price. You know, Apple now is like 300, 305. Why I don't set the strike price at 270, 280 to collect more premiums? It's because of the earlier reason I mentioned. Apple has just released earnings result about 1 to 2 weeks ago. So usually pre and post 2 weeks of earnings result, the stock price will fluctuate a lot. Okay, same thing, when the stock price fluctuate, the underlying options prices fluctuate even faster. really fast. So that's why I choose to set a further strike price to give me more margin of safety. Okay, so 190 and 250 over a bit of longer period of time. So I've both time and the strike price on my side. Further strike price to be safer, and also more time for the stock to potentially go up higher. Okay, so that's my main thought process on why I choose to sold 2 Apple put at these 2 particular prices and the direction. Okay, so I know you see 660, you sell 2 put, only earn 660. Sounds very little, right? Sounds very little. But you think long term, Every few days, I sell 2 puts. You know, 1 month easily can be a few $1,000s. 1 year easily, you know, depending, okay, 1 year can be 30, 40, 50K or even more. So you can see the whole idea is, I know I said it before, but just let me repeat it. This option view strategy cannot be greedy. Greedy people will set the strike price, okay, the strike price very close to the stock price to farm a lot of premiums. Okay, instead of 660, right, they will aim for $1,000 premium. Okay, they want $500 premium for each contract. So that's how they fail the option view strategy. That's how they bust their account. Okay, cold hard truth. So that's why if you're someone who is not impatient, you are not greedy, you are someone who foresee that, hey, if I consistently do it correctly and I manage my risk level, size my position up correctly, option view strategy can be very profitable. Okay, very. Okay, like I said, all my trades I mean I tell you honestly what I do, and then you all can see the differences. So I do hope this sharing will aid you all in your decision process. And I know some of you are really trying to learn the option view strategy, and I do hope my sharing helps you all in picking up this skill, and then you all also can do it yourself and make money. End of the day, the purpose of this channel is for everybody, okay, here to make money. That's our mission, okay? Okay. Yeah, so that's the main purpose of my 2 option new puts that I have highlighted. So you have any questions about the Apple put, can let me know. Or if you also initiated position in the Apple put, can let me know also. I also want to hear your thoughts. And I know some people have this classical idea of always selling at 0.3 delta and 30 to 45 days DTE expiry. Okay? Personally, if you have done it long enough, if you keep doing 0.3 delta at 30 to 45 days DTE options expiry, it will eventually bust your account. I hate to say, if you keep doing that for like 30, 45 days, sell all the contract at 30 to 45 days, it will bust your account. Okay, if you're long enough in this view strategy, you will know that 0.3 delta is the ideal risk reward ratio, but not the risk level. Very big difference. Risk reward ratio versus risk level is a big thing. Big difference, okay? Yes, you want good risk reward ratio, so you can sell some 0.3 delta, but you also want to manage your risk level. So if you all put at 0.3 delta, 30 to 45 day DTE, there will be a day all of them will be assigned to it at one go. You'll be in trouble. But if you stagger a different strike price, different duration, different delta like 0.1, 0.2, you suddenly have a bigger margin of safety, and time is on your side for the stock to potentially recover. So that's the whole basis idea of trying to set your strike prices varying, so you have various strike prices. Don't all in on one strike price just because you want higher premium, or because so-called statistically research that best risk reward ratio is 0.3 delta 30 to 45 DTE options. Okay, you strictly follow that, you will find yourself one day, just one fine day, you will be in trouble. Especially if there's a downturn like tariff, that's it. COVID, that's it. Okay, so hopefully these two this sharing has helped you out a bit. And then anything can let me know, any questions. And then okay, so I just share one last part. Okay, just one last part on this options component. Then we move on to something else, and then we move on to the market part already. Okay, wait, give me a while. Let me drink some water. Okay, so you know what? The past few days we have been talking about covered calls, right? Covered call, the concept of covered calls. Why is it like important to set the correct strike price, and the triple income idea of covered calls. So today just want to just touch on a little bit more. Then likely we won't talk about covered call for some time. Okay, so just a small last part on covered call. Okay, so one of the covered call idea is I thought about willingness to take assignment, and I just want to emphasize a bit. taking assignment is one of the strategy, okay, one of the essence again in the option view strategy. If you are not willing to take assignments sometimes, you will miss out a lot. Let me explain to you. Okay, let me explain. Okay, so and let me just give you an example straight away. Okay, let's just use Apple. Okay, Apple is $100 now in the market. $100. Okay, so you sell a, let's say, sorry, not cover call. I want to talk about cash cover put. Cash cover put. Okay, sorry, it's cash cover put. No, not cover call, no assignment because you get called a bit. Sorry, I was confused. So cash cover put. Okay, I'm talking about cash cover put. So let's say, okay, Apple is at $100. You sell a cash cover put at $120. Example, $120. So the day come, sorry, you sell a cash cover put at $80. Sorry, my mind a bit not functioning. Okay, wait, let me restart. Cash cover puts, okay, you sell a cash cover put at, let's say, $80 Apple. So Apple is $100, suddenly drop to $70. You have to take assignment because your cash cover put strike price is $80. So you have no choice but to buy Apple at $80 even if the stock price is $70. So here you usually got two options. Number one, you take assignment, buy Apple share at $80, or you roll. Roll means you close and then sell another one further out. Hopefully you can recoup your money. So remember, every time you close a position, okay, close an option put position like that, you have to pay money to close it, okay? Or they call it out of the money, that kind of stuff. So in short, when you close the option, you have to pay money to close. So technically that's a loss. So rolling is like, what some people say, close at a loss and then sell another one at a higher profit to recoup back your loss. Okay, that's what I mean by rolling. So you close it at a loss, yes, that means you have to pay money. Okay, that's number one, you pay money. Then number two, you sell a further one, then you collect more premiums, hopefully enough to recoup back your losses with a further strike price. So this is why now let's take a look at another scenario. Okay, if you choose to take assignment, let's say you take assignment. Okay, I no choice, I take Apple assignment at $80. Number one, remember, when you take assignment, you don't have to close the option. So you don't have to pay money to close the option. So when you take assignment, you don't lose money in that sense. Okay, you don't have to pay any money to close the contract. The premiums that you originally collected is still with you. Okay, so that's point number one. Now point number two, the moment you assign this 100 Apple shares, you can actually start selling covered calls on it. So whatever covered calls you sell on this new 100 Apple shares, the premium is yours to collect as well. Now the third thing is, yes, I know you bought Apple at $80 and the current stock price is $70, but there is potential that Apple could climb back up. Okay, so remember, that's why always only sell cash cover put on stocks you want to own, not on stocks you don't want to own, especially on good companies. Let's be honest, if it's Apple, there is a very good chance Apple could climb back up. Okay, that's a cold truth, right? Cold truth. So imagine buying Apple at, let's say $80, okay. Then Apple slowly creep back up to maybe 90, 100, 110, or even 120. So you can see the potential gain you could get from the capital appreciation. So not only did you actually technically bought Apple at a discount, because OG, right, the stock, Apple is $100, but your strike price is $80. So technically, you actually bought at a $20 discount for yourself. Then you can see that's where all the concept comes into play. You get the premium you first collected from selling the cash cover put. Second, you get the premium you sell any cover cost on top of it after getting assigned. Now third is the capital appreciation. Capital appreciation that could give you the huge gain as well. So imagine, let's say you get assigned $80, okay, then you sell cover cost on it, maybe you sell the strike price at $100, so that's another $20 gain per share. So 100 share is $2,000 plus that 2, 3, 4, 500 premium from both direction. Cash cover put plus the cover call premium maybe add up together $500. So $2,500. So that's why I just want to highlight is that taking assignment and knowing when to take assignment is also equally important. So I've been through it before. I tried to roll a lot of things, and I mean, you can keep rolling non-stop. Technically, you can roll infinitely. Okay, but your profit margin is significantly capped. Whereas, if you are willing to take assignment, especially on good companies you believe will do well in the long run, you could potentially get much higher return. So today I just want to emphasize, because yesterday I talked about this covered call triple income concept, dividend, all these things, having strong capital appreciation. It goes similarly for your cash cover put. Cash cover put is not just collect premium, avoid assignment, roll, say bye-bye. More than that, taking assignment is also a skill set that you should bear in mind as well. So if you want to do this option view strategy profitably, okay, you must be willing to take assignment at times. Okay, so when to take assignment, this one is completely up to you based on your cash flow, your belief in the company, how much position you have right now. Like example, maybe let's say I have very little Apple and I get assigned 200-300 shares. I will take them all. Okay, I will take them all because I don't have much Apple and I don't mind holding Apple for the long term. And I would love to hold Apple so I can sell covered calls on them. So it really depends on your position sizing, your portfolio, how much risk you can take. Okay, okay. So that's it. I just want to really talk about this assignment part, about this cash cover put. It's not just premiums. It's also about getting the stock itself, hold it, selling calls on it, and then setting the correct strike price so you can also gain from capital appreciation. And the capital appreciation matters a lot as well. It matters a lot. So don't give this part a skip. Okay, when the day you sell cash cover put, if any of you started selling or going to start selling, just remember capital appreciation plays an important role as well for you to really truly farm the wheel thoroughly. Not just premium, but the capital appreciation part is something you can really boost your portfolio much faster. Okay, and let me drink some water. Sorry. So you can see based on what I shared earlier, when the scenario occurs, good. But imagine if the scenario is there, but I choose not to take assignment, I choose to roll, then I will have missed out on all this profit. Like I said, when you roll, you are closing it at a loss. You have to pay money, you close at a loss, and then sell at a further strike price in hope that the amount of profit you get is enough to cover this loss. So technically, you are not making any money, okay? Or maybe you make a little bit, okay? If the credit you get from selling a further strike price, further cash, okay, another cash cover put that's further way out, maybe it could cover your OG loss. And if that happens, it's just equilibrium. So technically, your portfolio is stagnant, okay? Stagnant there. Okay, so this is something you try to bear in mind, that to do this view strategy, it's not just always roll. It's a very powerful strategy, okay? I said before in my previous stream, it's a skill that you should learn and master if you want to do well in the option view strategy. Rolling is very important, but it's not always about rolling. Assignment, capital appreciation plays an important part as well. Okay, that's all. I don't speak further. If not, no ending. There's so many other components of this cash cover put. So maybe we can keep the rest for another time. So if you have any questions, feel free to highlight before we move on to the market. Hey, KMF, good to see you. Okay, for 2 puts, does it mean your capital of 50K is locked up till December 26? Okay, so this is a good question. Okay, let me answer. Okay, technically, yes. Okay, technically, okay. So for beginners or new people, new players to the options view strategy, always keep enough cash to take assignment. So you are right at KMF here. If you sell, example, 250 strike price for each Apple put, yes, you need to stand by 50K. Technically, correct, okay? But you think logically, the Apple put that I've assigned, right? You see that I made down there. Okay, the first row and the fourth row, okay? One expire in December this year. The other one expire only in December 2027. Do I need the 50K now? We ask ourselves, do we need the 50K now if my option is expiring end of the year? and end of next year. Do I need 50K now directly? Technically no. Technically no. But of course, the day when it gets exercised, it gets assigned, I must have the cash ready, okay, to either take assignment or roll, depending on what you want to do. So if you're seasoned enough, okay, you're experienced enough with the option view strategy, you will start to realize that you do not necessarily need the cash immediately on your hand right now. Okay, you can make sure that as long as enough cash flow throughout the months and years, you know that every now and then there's new covered call you sold that will be called away, cash will be coming in maybe next month. Maybe this month you don't have extra 50K, but 3 months later you have extra 50K. So the whole idea of this cash flow will allow you to sell positions, be it cash cover put a few months later or years down the road. So if you are seasoned enough and you have good cash flow management, you know cash is coming here and there, every month you got this option expire, that option expire, money move around here and there, then yes, technically, because when you sell all these contracts, you don't need the money immediately. Okay, I may not have all the money right now. I do not have it. Because when you sell it, you don't have to pay, because like I said, when you sell a cash cover put, they don't take money upfront. No. When you sell a cash cover put, they give you money upfront. Premium is given to you directly. They don't have to, you don't have to say things like, hey, I need to give you the 50K. Then I can sell the cash cover put. Then you hold my 50K. That's not how it works. Okay? 50K is yours to keep as well, be it you have it or don't have it. But remember, the day when you're assigned, your contract expire or whatever, you must be ready to take the assignment. If you don't have the 50K, what will they do? They will forcefully sell your stocks or forcefully close your position and then use that money to cover or take assignment. Okay, so I hope I answer your question. So yes, if you are beginner, okay, new, please don't try to sell without money. It's a bit dangerous. But if you are seasoned enough, you know your cash flow, you have designed your system in a way that I have cash cover put and covered costs expiring every few weeks, every now and then. You know that cash flow will keep coming in, keep swimming here and there. So yeah, like I said, this Apple put, let's say example, December this year, it's 250 strike price, so I need 25K. Of course, by the end of this year, I will have 25K ready, no problem. Then another contract, next year, end of December, $190 strike price means I need 19K to be ready. By next year, once again, I'm confident 19K, no problem. So I hope I managed to answer your questions, okay? So feel free to let me know, KMF, if my explanation not good enough or you need me to give more examples. So having said that, I also want to let you all know, it doesn't mean I'm not holding any cash down, okay? Because of the amount of put position you see I have, very open now. You look at my first screen, the put position I have 4 Apple put, 4 Google put, 4 Nvidia put, 3 SPY put. Okay, there's tons and tons of money, a lot of money if I get assigned. So that's why I have various strike prices, expiry dates on this. Imagine, that's why if I put all this, imagine all these puts I have on top, my first screen. All the puts, I set at 1 month to expiry. The day 1 month happens and the stock prices didn't move in my direction, move against me, I get assigned everything, I will die. My account will be bust. Okay, bust. So that's why setting different strike prices with different contracts is very important to be in the game for the long run. Okay, my philosophy, my rule in this option view strategy is consistently keep making income throughout the year days. Bear market, bull market, sideways market, all this, I want to be consistently making money as much as possible. And my philosophy, and in fact not just philosophy, to use the option view strategy correctly, is all about multiple small wins. Yeah, like I said, I sold 2 Apple put, only got $650, $660, but it's all these multiple small wins that eventually add up to a big win. That is the essence of the option view strategy. Okay? Yeah. If my explanation not clear, feel free to let me know, KMF. Feel free to let me know. Or if any one of you are not too sure, also can let me know. But at this juncture, I can also honestly tell you, I'm holding about 100 plus K of capital cash, okay, just in case of emergency. Because I want to quickly share with you, I know I covered it, I think in the pre-stream, in my first few stream, but in case some of you all never new to here, just remember, let's say you sell an Apple put, the contract expiring, let's say example expire next year December. Technically, the contract expire next year, so you only need money ready by next year, right? Because that's where you get assignment, or be it, you won't get assigned. But always remember, because you sold the contract to a buyer, whoever the buyer is out there in the world spinning around without his underwear or whatever, okay, the buyer bought your contract. Remember, he can still exercise the contract anytime. Okay, so no doubt I have an Apple put that expire, let's say end of this year or even next year. He can choose to exercise today or tomorrow, and I must have the cash ready to buy. So this part you must bear in mind, please bear in mind. Okay, the strategy I'm taking is a bit higher risk because I'm well versed in it. I've done this option view for years already, so I know the thing inside out, roughly when I need the cash ready, all these things. But if you are doing this, you have to bear in mind, they can exercise anytime and you must be ready to buy or take assignment. But why buyers don't do that? Why the person who bought your contract, right? You sold contract, right? You sell cash cover put, sell so many options. Why the buyer of the option don't exercise immediately? Because of this thing called extrinsic value. You know, option has two parts of the value, okay? They call it intrinsic or extrinsic. Okay, I don't want to confuse you. Maybe next time we can talk about it. In short, right, extrinsic, it just means that the time of the contract, okay, be it called time decay, time value, the time itself has value. So imagine, I sold a contract until next year, right, the fourth row, Apple put 2027 December. So from now till end of December next year, the time, the duration, 1 year plus, itself has value. Okay, there is value contained within this time frame. So I don't know, maybe it can be $50 or $100 depending, okay. So if he choose to exercise immediately, it means that he's giving up this $100 value to you. That's why nobody do that. Of course nobody do that, right? If you are the buyer, let's say you bought this option from me, would you want to immediately exercise? Of course no, you would probably want to wait a longer period of time to potentially earn more or gain from me, or even until next year, then you see how it goes before you choose to exercise and assign to me. Because like I said, the time itself, the value is there. Okay, time of the contract has value. So just bear in mind that. So that is one of the reasons why usually, okay, people who bought your contract won't exercise immediately. Because if he do that, he's being stupid. He's giving you the free value. No, he's not maximizing the 1 year plus of duration for the market to potentially move their stock in his favor. He's just like giving it to you free money. So that's why usually that scenario will not occur. Okay, that scenario usually will not occur. But doesn't mean it won't. There are some people with fat fingers, or sometimes, throughout my years of option trading, there are, I think, actually not many, maybe 2 incidents only. This person don't know what happened, maybe pressed wrongly, and then I was given the assignment. But of course, I make money immediately because the value of the contract for the time extrinsic value is still there. So I literally just collect a few $100 free of charge. Okay, so that's the whole idea, okay? So please bear in mind, like what I think KMF brought up a very good question. If you are new to options, okay, I know some of you are quite new, okay, please, for beginner, don't have to be, they call it 一步登天, one step want to fly up the sky, go to heaven, that kind. Take it slowly, okay? Just sell a few contracts, 1 or 2 only. Make sure you have cash ready. Always get ready the cash, just to get the hang of it, so that in case you get assignment, you are ready. But of course, once you are seasoned, you become very experienced, then you can start doing this cash flow option view strategy. I want to be honest, when you hit that level, it's where you truly extract the whole essence of the option view strategy. You really thoroughly, get all the pros of the option view strategy and put into your portfolio. That is really, I think, okay, I'm not trying to say I'm very expert, but I think after trading option for so long, it's only like a few years ago I started to do this, to truly maximize the option view strategy thoroughly by staggering options, consistently make sure every few days or every few weeks there's option expire, covered call get caught away, some caught away, some not caught away. So I have a cash flow that keep moving around. It's like a financial system or a factory I've designed for myself in my home in front of the desk, talking to you all. Okay, it's like a factory I built here, that it will keep spinning and spinning and spinning and spinning. The day when this wheel spinning is when there's a nuclear disaster or there's an alien come down and pull me back to Mars. Okay, if not, by right, this strategy that I've designed should possibly, high probability, will consistently make me money, be in an up market or down market, because of how I design it and the various strike price I have set. Okay, if market crash by 80 to 100%, then of course I'm gone case. Okay, but the day market crash by 100%, I think everybody gone case. Money is the last thing we worry about. Okay, it's like saying SPY 500 go to zero. If the top 500 company goes to zero tomorrow, I think there are more important things to worry about than money really. Okay? We probably had a nuclear fallout, like fallout 3, fallout 4, fallout 5. Okay? Okay, so that's all for the options. I hope I managed to answer your question. Do you mark or can actually overload? Okay, I don't really mark on my calendar per se, because I'm quite used to it. I actually, okay, to be honest, I actually did that when I first started, because there's a few options and then I can't really track because I'm not too used to it. So I do mark down in the Excel sheet. So last time, I tell you honestly, in fact, you want to see some of my past Excel sheet I can show you. I do track every single options, call and capital I put, every single thing I will track. And then I will make sure the expiry date, all these things I will set. But I will set alert lah, because every day I open the market, I will just roughly look at the dates when it's expiring and I need to get the cash ready. But nowadays, to be honest, I hardly do that already, because number one, I'm jobless. Okay, retire lah. Okay, no say jobless, retire. But you want to call me jobless also can. Because now I'm jobless and I trade the market full time, Monday to Friday, literally from market open until market close. So I'm always in touch with all this market, the portfolio I have. So I'm so used to it and I'm spending so much time on it, to the point I don't need any calendar reminders. I just look at the whatever contracts I have, and then across all my brokerage account, then I roughly know, this period I need to have this amount of money. Okay, then next month I need to get ready maybe 50K, or maybe 2 weeks later, hey, my contracts, 2 covered call will be expired. Example, some of my Nvidia covered calls and SPY covered call here, they are expiring in 1 or 2 months. Then I know a lump sum of money is coming in. So to the point, I think I'm so used to it and done it so often recently, especially in the past 1 year. My whole entire life is literally spent on this, just keep trading and trading the option view strategy. So at this juncture, I don't really need any calendar or reminders anymore. And I'm sure if you've done it long enough and you're seasoned enough and you've spent a lot of time on it, like me, no life, whole day or do this, yeah, I'm sure you also don't need calendar also. Okay. Okay, thanks, but I'll explain some early assignment due to sudden market crash. Yeah, precisely. KMFA, thanks for highlighting that. Yes, so that's why if the stock move against you too much and too fast, like you said, market crash, right? The buyer has a high probability of exercising the option because they are profitable. Okay, the contract on their hand is profitable already. So they will want to exercise it early to capture and lock in the gain. But remember, when they exercise means what? You have to buy because you are the seller of the option. You sold it, he's the buyer. He exercised it means he will sell you the share at the strike price. You have to take it. So example, Apple, I say Apple again, $100 stock price. You sold your cash cover put Apple with a strike price of $8. Apple crashed to $50. he's profitable, he will want to close the contract, and you have to take assignment. So yeah, that's why to avoid this type of scenario, okay, one of the strategy is to really set a further strike price. Okay, there isn't really any other way, or you have a longer duration. So you combine those further strike price plus longer duration, then less likely, if the stock crash by 10%, even by 10%, you are less likely to get assigned immediately because there's still your strike price is still far away, far enough, and because of the duration you have, it is likely he still want to hold the contract because maybe you still have 1 more year left. The value is there. He wouldn't want to give it up to you immediately. So that's why the option view strategy for those who are still here, I mean for those who are new to it, cannot be greedy. Okay, really cannot be greedy when you sell options. When you choose to sell at a high strike price with low duration, that's where you can easily bust your account. Okay, KMF, thanks for highlighting that. So imagine if you keep selling at high strike prices close to the stock price, market crash, that's it. You will get all the assignment. Everything will be thrown to you. That's how you bust your account. So remember, option view strategy, selling option, is really not for the greedy people or people who want to make money fast. Fast, 10x, 20x, 30x, that kind. No. Slow, consistent, constantly making money. Multiple small wins that adds up to a big win. That's the whole idea of the option view strategy. Okay, any questions can let me know. Let me know. Okay, before we quickly move on. Wow, 10 o'clock already, 10 o'clock. Okay, I'll just do a quick one. Hey, any questions, feel free to let me know. Feel free to let me know. I'll try my best to address your inquiry. And then if I miss out a comment, please repeat. Okay, by the way, I hope you are doing well, KMF. I hope your options are profitable and you continue to make money. And you can also share with us if you have any cash cover put or covered calls on certain stocks. Because some of the viewers also share with me some of the stocks they buy and actually learn from them as well. Especially if you are well versed in energy stocks, can let me know because I have quite a bit of interest to learn about energy now. Because I foresee tech as the future, but for tech to work well in the future, AI to work well, energy is the core element. No energy, how to power up the AI, all this. So I'm quite into energy sectors now. So if you are good in that as well, please share with us, okay, what stocks you bought, so we also can learn from you. Okay. So I think because of time constraint, we won't go to the chit chat last part now. Okay, the last part chit chat we won't go, but we will go into the stock market now to identify opportunities and then have a quick discussion, and then I will share with you all my thoughts and plans and my next move based on the current market condition. Okay, because it's already 10:05, okay, 10:05, okay. But I started 10 minutes late lah, okay, so give me chance. Okay, so let's now look at the, a bit lag okay. Sorry, my computer a bit slow, a bit worse. slow. Okay, so let's just look at the stock market, see any opportunities. Okay, why like that? You all can see or not? Why my screen like that? Wait, give me a while. I'm trying to figure out my screen. I don't know why my screen is like that. Okay, just forgive me. Okay, anyway, let's look at the second screen first. Second screen on top. So let's look at the market and we see any. You all can see. I click here. Second screen. Okay, let's look at the market changes. Alibaba down 3%. You know, I talk about China stocks, so I won't talk further again. But some of you all give me good suggestion. Thank you so much, especially Yaf. Thank you for your suggestion on my China stocks. So I'm hoping for China stock to go up a bit more. But still, China stock, that's why China stocks, I hate to say, really very hard to go up. Okay, because of some of the reasons I shared in my previous stream. Okay, I won't repeat, don't worry. Okay, I won't repeat. But maybe next time we can talk a bit more on China stocks again. Well, I see all my China stock gone case. Baba, Yes, FXI, I got MG, yes, I also got. Tencent, I also got. Top 4, and these 4 are the highest bleeder today. Aiyo. When will I ever exit my China stocks? Hey, by the way, if you all have any ideas or opinion about China stock, can share with me. Because you all know lah, I have $50,000 loss on my China stock. So I'm trying to find ways to reduce the loss and get out of it. Okay, so Alphabet is down 1 point something percent. Honestly, I'm quite keen to sell cash cover put on Alphabet, but I can't because I already have quite a lot of puts on it already. So cannot be greedy, like I said. You have to really manage your position sizing. I have simply too much Alphabet puts and stocks already, so I can't afford to sell more, even though it looks very tempting to me now. I think the premium is not bad because the price already dropped by 1.7%. Microsoft stay at $500. $500. Yeah, we talked quite a bit of Microsoft yesterday, so we will not talk about it. Okay, Apple is about 306, so if it continues to persist around 305 over the next few days, I will just buy the Apple shares. Okay, like I said earlier just now, OG, I think it's the consolidation phase. People who want to take profit has taken profit and ran away. People who want to buy have bought it. So Apple now is kind of trending just sideways here and there. So if that is the price Apple will stay, I just have to get it. Okay, SPY is doing well, 773. So today I don't think there's any significant market movement. Yeah, it's just like 1% or 0.1%, that kind of stuff. Okay, so I probably won't have any move to make at this juncture, but if Apple were to, maybe in the next 1 or 2 hours, Apple were to hit like 303, 302, I will definitely get them. So I let you all know. So if it happens, once again, I will update you all tomorrow live, same timing. Okay, so that's pretty much okay. Nothing significant here today. So it's probably Apple only. I'll probably just buy Apple once it hits. Hopefully I can get Apple at like 303, 302, that kind. About 10 to 20 shares. I see how. So usually I don't trade in the first hour of the market because it's a bit volatile. I will probably start making move on the second or third hour. Okay, so just one last thing, okay, one last thing before we close it, okay? No chit-chat session, don't worry, no chit-chat session. But I just want to share with you my NVIDIA put, okay? So if you look at the, I'm not sure you can see, you know, okay, a bit smaller, sorry, okay? So row number 11, the one I highlighted, first screen on top, row 11. Okay, so NVIDIA put, there is a strike price $155, expiring next year in June. I've collected 1,200 premium. So the current contract price is $700 to close it. So this contract is already profitable 42%. So I always say my target is 50% profit margin to have a good risk-reward ratio. But for NVIDIA, I may consider closing it at the current price, the 42% profit margin. Why? So let me share with you. Because number one, NVIDIA is announcing results soon, in like 3 weeks time, I think 28th of August or something. Plus, this contract is really profitable by 42%. Do I want to wait until next year? Next year, June is like 10 months, you know. Do I want to wait 10 months to capture the remaining 60% profit? Plus, take a huge risk over this coming earnings season. Imagine if NVIDIA earnings report is very bad. Gone case. This NVIDIA put now is 42% profit. It can quickly turn sour. From 42% profit, maybe become 42% negative loss. Okay, loss. So instead of being profitable, it could easily turn into a loss. So that's why I did say before, I don't mind holding over earnings season as long as it's a longer contract. like this scenario, actually I still don't mind holding it because the contract expire next year, June. So it's still far away, so I don't mind holding over the earnings season because there's more time for the stock to recover. If there is a bad earnings this time now, maybe this coming report is bad, but there's multiple earnings season down the road for it to recover. But because of all the factors combined, number one, the earnings season, plus I'm already up 40%. Why do I want to wait 10 more months to capture the 60%? Plus, take a big risk, which is the coming earnings season. Who knows it's bad? Then I'm in trouble. So I share with you my thought process, okay? Same thing, I always try to aim for 50% profit margin. But when I close or sell options or whatever, I look at the micro and macro factors. Look at everything in totality. So since I'm up 40% already, plus earnings season coming, I may not want to take the risk and I may choose to close at this 42% profit margin. Okay, for the other three NVIDIA put you see below, that will also expire next year or even 2 years later, they are only at like 20 to 30% profit. So those I won't close because 20 to 30% profit seems a bit too low for me. Too low. And I think it's still worthwhile to hold it over the earnings season. No problem because it's a long-term contract. But this particular one, number 11, I'm seriously considering closing it because 10 months for the 60%, like not very worth it, you know, to wait 10 more months to capture the remaining 60%. Plus, there's this earnings season coming, so I may not want to take the risk. So I see how I'll update your live if I choose to close the position. So just to share with you all my thoughts way in advance. Okay, I don't want to like, you know, they call it horseback cannon. After something bad happens or something good happens, then I tell you all my move. No, I don't do that. I upfront tell you all what is my thought processes, my plans upfront. All 100% transparent. You all can see. Okay, those of y'all who have been in the previous stream, you all know, right? I mean, like example, YAF or even Flaming Snow, that kind. You all know all my position is live here, open share. So you even can criticize my position, all this, I welcome. Okay, so that's the last thing I want to cover because I always like to give you an update on the options position that I'm having and I plan to close. Because I know a lot of y'all very interested in the option view strategy. So hopefully with this sharing, I able to aid y'all in this kind of closure, when to close, profit margin, what are the factors you need to take in. Not just always 50%, 50%, 50%. Sometimes closing 40% is worth it if you feel that your portfolio is not able to withstand the risk, or you don't want to wait 10 months plus the earnings season coming. You don't want to risk it, so you don't want to capture that 60% over that 10 months. It's not worth it to you. So a lot of these factors in play that you should think about when you want to close your position. So if you can put all this together as you get more experience, I firmly believe you will eventually be a very good option view trader. Okay, so that's all. I won't repeat further, and this is my plan on NVIDIA cash cover put. So I do have some covered costs, actually quite a lot of covered costs on other stocks. I know I covered costs quite a bit in the past few streams, so I won't delve on it too much really. But in the future, I want to share with you some of the covered costs I sold, so you all can see directly live, you know, like why I set this kind of strike prices, so I can share with you the application of my thought processes. So hopefully that sharing will help you as well in terms of selling covered costs. Okay, that's all. I think we can stop the stream soon. So we want to say thank you so much, everyone. Thank you so much for dropping by, and you know, any comments, any questions, feel free to highlight. Okay, we will end the stream soon. If I miss out your comments, please let me know. Okay, so it's about 1 hour 10 minutes already. Okay, so we will be ending. Hey, thank you so much, everyone, for dropping by. Good to see you. Yaf, you know, Piran Rune, you know, you, KMF, or more familiar faces this time. I'm very happy to see you. And by the way, if Fleming Snow not here today, okay? So, like I said, feel free to say hi, you know, chit chat. and share with us your thoughts, because I also want to learn from you all. So same thing, my stream is Monday to Thursday, 9 p.m. Time zone is GMT plus 8. So I look forward to seeing you all tomorrow again. I wish you all a good Wednesday tomorrow, and hang on tight, weekend coming, we have a good time over the weekend. That's all. Thank you so much today for dropping by and hearing me, and I look forward to seeing you all tomorrow. Goodbye everyone, goodbye. Thank you so much, thank you so much. Hey, thank you Yaf, thank you Yaf. Good to see you all. Bye bye, bye bye.